Okay, it's 11 a.m. So let's get started. I'll call the meeting to order. Can we have a roll call, please?
Yes, and let me also start the live stream as well to make sure that the public can access the meeting. 1 second for that. It appears we're having some trouble with the live stream. If you can just give me 1 second here to fix that.
No problem.
Thank you so much.
Good morning, everyone.
Good morning.
We got nice press out of that event on Friday, huh, Susan?
Sure did. It
Right?
was nice. Yeah.
Yeah.
Yeah, that was really nice. It was a great event.
All right, let's try this one more time. I'm going to live stream the meeting again. All right, the live stream is not working. It appears that it's an issue with our equipment here in the office. However, because the meeting is public in that remote locations are available for the public, we can proceed and we'll be working towards fixing the issue here in our office as well, and begin the live stream whenever possible.
Okay, that sounds good.
It just for information, Gabby, it seems good on my end. This is Steve.
Oh, thanks, Steve. It's actually separate to the Zoom.
Oh.
Yeah, but we're working towards fixing it. Thank you. All right. Okay, the time is 11:03, so I can begin a roll call.
Good morning, everyone. Can I test my microphone?
We can hear you.
Oh, yes, we can hear you now, Rita. Thank you. Chair Santangelo?
Can anyone hear me?
Yes, we can hear you, Rita.
Yes.
You can hear me?
Yes.
I can't hear anybody.
Okay, let's make sure that.
Okay, I've asked the staff at the COG to help Rita with her audio.
Okay.
And I'll proceed with roll call. I'll note that committee member Kochar is present and we're working on her audio. Committee member Kalaikai.
Present.
Thank you. Committee member Zuckerman.
Here.
Thank you. Committee member O'Connor should be here any minute now, and committee member Newman is not able to make it today. But we do have a quorum.
Great. Thank you, Gabby. All right. Do we have any general public comment?
No, we did not receive any requests for general public comment.
Okay, moving on.
Did Lulu? I think it's like Martha. Oh, she probably not your breath.
Okay, let's move on to the consent agenda. Do I have a motion?
So moved.
I move approval.
I think we have a motion. and a
Okay,
second.
thank you. I'll now proceed to roll call for the consent agenda. Chair Santangelo,
Yes,
thank you. Committee Member Kochar, can you hear us? You are on mute. I will let her know that we still can't hear her. Oh, Committee Member Kochar, how do you vote?
Let me get out and get back, yeah. There we go, consent.
All right, I will come back to her. Committee Member Kalaikai,
Yes.
thank you. And Committee Member Zuckerman,
Yes.
thank you. And Committee Member Kochar, looks like she's hopped off, but this motion does pass.
okay. All right, thank you. Let's move on to our regular agenda, and item number 5 is our report from our Chief Financial Officer.
Terrific. Good morning, everyone. The principal topic for this meeting is the presentation of our audited financial results. Before we turn to that agenda item, I'll just let folks know that we recorded a gain of $20 million through the first 2 months of this fiscal year, a little bit below budget. We expect to give substantially all of that back in September. Unfortunately, September was just dramatically cooler than normal in our service area, resulting in substantially lower revenues. And insofar as we're typically position ourselves as being long because we're on a guard against a heat wave, we ended up liquidating that length into a market which prices were extremely low. The outlook for the balance of the year continues to look quite good. So I'm confident that we're gonna do well this fiscal year despite a little bit of adversity this summer. And our treasury cash flow remains quite good. No borrowing on the line of credit, and lots of cash available to pay our bills. And that concludes my brief remarks.
A question?
Please.
When you say that, David will be giving it back, is that the $13 million addition to net position or actually the whole net position?
Oh, just the addition.
Yeah.
So we'll probably break even, or maybe approximately break even for the first quarter.
Okay, yeah, because that's great.
Yep.
All right, thank you, David. That will bring us to item number 6, which is the report from the auditor.
Terrific. So I'll just kick this one off. You're going to, we've closed our fiscal year-end results and completed the audit. And you will see the audited financial statements in the pack. We are very pleased to report another successful audit completed by, it's the 6th successful annual audit of Clean Power Alliance's annual financial results, and the 4th audit completed successfully by our Senior Vice President of Finance, Wei Lasano. So a big congratulations to Wei and the accounting team. Order of operations here, we're going to receive the report from the auditor, and then we will do a bit of a breakout session, which will allow the finance committee to ask questions of the auditor without staff present. Then we'll bring everyone back together, and I will give a presentation of the financial results, and we can conclude that agenda item. So with no further ado, welcome Beth.
Yes.
Beth on.
Hello,
Okay.
can you hear me okay?
Yes, we can hear you.
Yep.
Perfect. Let me just.
Yes.
We do that through a risk assessment that we perform as we plan the audit, where we review key controls and processes in the financial statement segments. We do a risk assessment for any potential fraud or error. And then based on that assessment, we prepare our audit procedures and then, do a lot of detailed tests to ensure that things are reported correctly and in compliance with GAAP. We also do a review of significant accounting estimates and appropriateness of any accounting policies like capitalization thresholds, investment policies, etc. All of that combines, and then we're able to provide you with that clean, nice audit opinion. We focus our planning on key transaction cycles, which is included in the next slide. We do perform tested controls over the disbursement segment, and there were no items noted as part of those tests. We do also look at areas with significant estimates. That includes the allowance for doubtful accounts, as well as unbilled revenues. Both of those are kind of described in a little bit more detail in that audit insights and results report. We also spend a good amount of time looking at the implementation of new accounting standards, which has been pretty busy the last few years. In the current year, GASB 96 was effective for the Clean Power Alliance. So management spent quite a bit of time reviewing contracts related to subscription-based IT arrangements and determining if they scoped into that accounting standard. Luckily, there was no impact related to that standard to your financial statements, but it still takes quite a bit of time to gather all that information and perform that assessment. And here's the main key areas of audit focus. I did mention that we test controls over disbursements. We also do detailed tests of transactions as well. And we do spend quite a bit of time reviewing the SOC report from Calpine as it relates to your billing cycle. And of course, review bank confirmations for cash and investments, general net position calculations, and review in great detail the financial statement disclosures. All in all, our audit was performed in accordance with generally accepted auditing standards, which has an objective to provide reasonable assurance that financial statements are free from material misstatement. The financial statements of CPA did receive an unmodified opinion, which is a clean opinion and the highest level of assurance that we can provide as your auditors. As I mentioned, we do go through a pretty intensive planning process where we review processes and controls over those key financial segments. And if anything were to come to our attention that relates to a control deficiency in those areas that would rise to the level of a significant deficiency or material weakness, we would be required to communicate that to you. And there were no material weaknesses or significant deficiencies noted as part of our procedures. And I know, when you see this from year to year or get these same results from year to year as you all have, it's easy to say, or I guess expect it to not take it with the importance that it is, because saying that there are no material weaknesses or significant deficiencies basically means your audit and finance department prepared a full set of financial statements and footnotes with no material adjustments, no significant adjustments to the footnotes, which is actually a big feat, especially considering the pretty intense new governmental accounting standards that were effective in the prior year and the current year.
So sorry, Gabby, can you mute your room there? We're hearing you.
Yeah, so it is a very big deal and it is something for your accounting and finance department.
Give me 1 second, I will mute them right now. It was not us, no.
Included in your audit insights and results report is a section with required communication to those charged with governance. This generally doesn't change much from year to year. I used to say, you know, if you ever have insomnia, it's a great read. But any significant findings or items related to the audit or new things related to the audit in the current year would show up in this section. So it is important to note. So I'll just do kind of a high level breeze through of some of the key items that are included. As part of the audit, we didn't find any audit adjustments or past adjusting journal entries. There's a discussion related to that we are in agreement with the accounting policies and significant estimates that are included in your financial statements, that we are independent with respect to the Clean Power Alliance, and of course that there were no general audit findings or concerns as it relates to the audit. So while it is boring and it generally doesn't change much from year to year, it is important information to review and note. And of course, as you go through it, if you do ever have any questions related to the audit, please don't hesitate to reach out, because we're always happy to have a conversation with you to answer any questions that you have. But that's generally why we're here. And luckily, the next item that I wanted to talk about is the future accounting standards. And this listing is much shorter than it has been the last couple of years. Although unfortunately, in the next year, there will be a few new additions to it. So it does appear the heavy lifting for GASB 87 and GASB 96 for subscription-based IT arrangements is over, and we have a few new accounting standards on the horizon, but likely they won't have as big of an impact or be as hard of a lift to implement and ensure that things are recorded correctly. The last, I have a time for questions, but also I wanted to provide you with our contact information if you do ever have any questions. As I mentioned, I'm the partner on the engagement, but Ryan Tyler, the manager, does most of the heavy lifting and all of the detailed testing and managing and making sure that your needs are met, and also that we meet your timeline. Hi, Steve, did you have a question?
Yeah, just real quick. After the audit is approved by the general board, do we simply retain it for possible future purposes? It's not submitted to anyone, is it?
Is that for me? Not to my knowledge. I don't know if you submit it to anybody.
Okay.
So a couple of things. First of all, the board doesn't approve the audit. It receives the audit because it's an independent opinion. The board doesn't have to vote to accept it or not.
Okay.
It will be presented, it will be delivered to the board at next week's board meeting. And we post it on our website as part of our public documents. And it becomes part of our overall credit profile.
Okay, thanks, Ted.
Yeah.
But no agencies or anybody that need to review it.
David?
That's correct. Yeah, that's correct.
Yep.
Okay.
Is there any other questions? I do want to say a nice thank you to all the folks in the accounting and finance department at Clean Power Alliance, because they make it easy for us. I know it takes us quite a few hours to do the audit, but I know it takes them probably double the amount of time to prepare for it. And they are always incredibly responsive and great to work with. So we do appreciate that. Hi, do you have a question? Is it Rita?
Hi, thank you. Are we gonna have like a breakout session, or are we gonna just ask questions here?
I think we're ready for the breakout.
Sure.
Okay, so I will depart and then you can physically depart and then you can let me know when you want me back.
All right, I will open a room for staff to join. And members of the committee can stay here in the live session. So staff, please go ahead and join that room. All right, we're good to go.
We're
Go ahead.
ready?
Yes, we're ready.
Okay. Do we just jump into questions or do you have something to present to us first?
No, you can please just jump into any questions you have. I just went through my presentation, so.
Okay.
Good.
I thought Rita had her hand up, but I don't. No?
I know it's kind of weird because I have my like two different devices, so I can hear through one, but you can see me through the other one. I'm sorry. Okay, I have some questions there. I don't think they're big questions, but let me just ask them. I think, and I have a couple of pages on my notes. So I think one of the things that you talked about was that there's some estimation that happens. And I think I heard you say that the level of estimation was reviewed by your office and it's acceptable. Is that correct?
Yeah, we basically look at the methodology behind these significant estimates and the reasonableness of them. And yeah, so I think that the unbilled revenues and the allowance for doubtful accounts.
Okay. And then I have a couple of just little notes that I picked up when I was reviewing the report. For the current assets for last fiscal year and for this fiscal year, it takes into account the accounts receivable. And so I know we have a lot of
Delinquent.
Yeah, there you go. And I know you, Bethany, you said the doubtful accounts. Are those delinquencies included in that?
Yes. So the estimate really is how many do we think will be delinquent, or what is our estimate that these old ones won't be collected. And that is net with the accounts receivable number. And I think it's included, well, I know it is included in one of the footnotes.
I'm looking at page 56 of 95, where it's the current assets, and it breaks it down for fiscal year 22, 23, and then fiscal year 21, 22.
Okay, so you're looking at the MD&A, I believe. Does it say management's discussion and analysis up at the top?
No. It says agenda page 56. Oh, maybe
it's in our packet. Let me go ahead and share the screen.
Oh, it's page 6 of the report. Sorry.
Okay, yeah, that helps me a lot.
Sorry.
No, you're fine. You're fine. Yeah, so that is the MD&A, and included in that current asset is the accounts receivable, which is net of the allowance for doubtful accounts. So if you go to page,
you said net, so it doesn't include the doubtful accounts.
It does include the doubtful accounts. So I'm sorry, it is net of the doubtful accounts. So those doubtful accounts are excluded from the accounts receivable. Sorry.
Okay, got it. Okay.
If you look at page 23 of the financial statements of the footnotes, it does split that out. In note 4, right there, you'll see the accounts receivable and then the net of the allowance for the doubtful accounts to show the net accounts receivable, which is what is included in your financial statements and what sums up into that MD&A number for current assets that you're looking at.
Okay, got it. Okay, you can come back to me if anyone else has a question. I'm going to go through and see what other questions I still had.
Did you have a question? Was your hand up earlier?
Yeah, actually, I do. Maybe I don't need to raise my hand. I've got to raise. But I'll just ask one and then we go back to Rita. I may have a couple more. On page 6 of the report, page 31 of the agenda, we have internal control matters. And the first paragraph, last sentence.
Okay, I'm sorry. Are you in the audit insights and results report?
Yeah,
Yep,
I
page
think so.
6. Sorry, I
Page,
was in the footnotes. Okay, yes, I'm with you now. I'm with you now.
okay, the first paragraph, last sentence, we are not expressing an opinion on the effectiveness of CPA's internal control. And yet, on the last sentence of the 4th paragraph,
Yep.
you kind of do give an opinion. You stated.
No,
We
we
did
don't
not-
give an opinion. We just say we didn't identify any deficiencies based on our procedures. Had we done other procedures, it's possible there could be one.
Okay. Just out of curiosity, well, maybe we need to ask this to David. Because we've had trouble in the past, and it's not, it wasn't us, it was others, SCE.
Right.
But when we, does CAISO kind of stand as a governor that monitors payments and deliveries to match our payments to suppliers and deliveries from suppliers? How is that monitored?
That would probably be a question for David. Offhand, I don't think I can speak very intelligently about the detailed process and controls over that segment, just because it's not
Okay,
on the tip of my brain. I do know, obviously CAISO is an electric market, so they are the ones who are helping with the buying and selling of electricity, making sure it gets to the right places. And I know the Clean Power Alliance does have a risk management policy, and I know they have controls in place to ensure that they are, meeting the regulatory needs and buying and selling the power.
right, but I think you understand the question. That doesn't cover if for some reason we're not getting full delivery on a purchase.
I believe that's all related to the control process. And
Okay.
again, I don't have
Sure,
the detail
that's it.
of it. But normally as part of general energy trading, there's a front office, there's a mid office, there's a back office.
And there's CAISO, yeah.
Yeah, I know CAISO does the, I guess I wouldn't consider them part of your control function.
Okay,
Because
okay.
you would have a separate control to ensure that everything that you have said you wanted was delivered and charged to you appropriately. And that would generally be the back office to do that reconciliation and make
Okay.
sure that the settlements are correct.
And those are usually, it's standard procedure, how that typically takes place.
Yeah. And I can't say, again, David would be the best one to give you probably the detail of all those controls
Okay,
and processes.
yeah.
Offhand.
Thank you.
Yeah, of course.
Is it back to me?
Yeah.
Okay. Bethany, you said something when you were responding to Steve's question, and it just kind of got me thinking. You said, and I could be, correct me if it's not exactly what you said, but there are, what did you say? You said something like there are certain procedures that you guys didn't do but when he asked about you taking an opinion.
Yeah, we don't provide an opinion on the internal controls. We review internal controls as part of our audit, but we don't review all of them, right? We review the key controls to help us put together our risk assessment. And there could be control deficiencies that aren't identified as part of our procedure, which is why we don't provide an opinion on the controls.
Are there other tasks that we should request in the future for like a future contract to look more deeply into some of these things? Is that something that you would recommend that the board consider?
I mean, you can, I suppose, if you see that as a risk and if you have concerns in that area. There are, you know, I guess consulting projects where you do a deeper dive in, you know, specific controls. That's just not in the general scope of the audit.
Okay, that makes sense.
Do you have any other questions? I have my financial statements handy for you for the
I
page
do.
numbers.
I still have more, but I'm gonna turn it over to somebody else. You can come back to me.
Does anybody else have any questions?
I guess I get to go back and forth with Rita. On page 34, I believe it's 9 of the packet, last sentence, did not audit the required supplemental information and do not express an opinion or any assurance on the required supplemental information.
Yep.
And of course, that makes sense. You couldn't provide an opinion if you didn't audit it. Could you briefly review what's involved there with respect to the RSI?
Right. So the RSI is, in your financial statements, is the management's discussion and analysis. So that is the, you know, the section of the report that management puts together. It has summarized financial information, and then they kind of explain the changes from year to year.
Okay.
So we review that. I mean, we read through it, we tick and tie it to our audited financial statements to make sure that it's an agreement. We recalculate the calculations that are in there. And then we also read through to say, does that explanation make sense? Is that consistent with what we saw as part of the audit?
I see. So it's a consistency thing. It's not information that you may have requested that's embedded in your audit.
I mean, if it says, you know, we had capital additions of blank number, we would agree that to our testing to make sure that
Okay.
it was in agreement. So we basically just read through it and we try to tick and tie all the numbers unless it's a number that there's no way
Right.
we would be able to tie
Right.
it.
Okay, thanks, Bethany.
Yeah, of course. Rita, we're back to you.
Okay. I'm looking on page 20 of the report on revenue recognition. It's like midway through.
Okay. There it is.
I know what I've heard is the accounting principles that are used are acceptable. My only question to you would be is because you've been doing our audit for a number of years now, has there been any like deviation in how things are accounted over the years, or has it been consistent throughout the years?
I mean, I think it's been pretty consistent. Obviously, there's been a few new accounting standards that have had to be implemented. But I think everything's been pretty much accounted for consistently from year to year. So the accounting standards that CPA follows are governmental accounting standards from the Governmental Accounting Standards Board. And they have always followed those and been consistent in the application of those standards.
That sounds good. And I think that for me, that concludes my questions. That was my last one.
Okay,
Thank you.
of course. Thank you all for having questions and reading the report so thoroughly. That doesn't normally happen. Hi, Steve.
Another one, on that same page, this is just for information because I've forgotten. We had to restate I think it was our very first audit period, earliest period presented. And I think that was based upon poor information from a counterparty or SCE. Do you recall what that was for? I can always ask David.
Do you remember what year that was?
I should, but I don't. It was probably 17, 18.
Well, you're testing my memory. I can do a quick search, see if I can find out quickly. I don't recall a restatement offhand. Doesn't mean it didn't happen.
David will know, so that's okay. Now I have a format, a really trivial formatting. I think it's page 51 that probably you'll want to change. There's a footer on the bottom of the page that probably doesn't want to be there on 51, 52. You've got overlaid footer.
Is that, can you tell me the page number in just the footnotes document? That only goes to 31.
I think it's page 52
Are you referring to the agenda packet?
of the agenda package. Yeah.
Okay, yeah, sure, we can keep an eye out for that, Bethany. I think it's just the overlay of the number on your document. Yeah.
Gotcha. Yeah, I think the actual financial statements doesn't have that on it.
Yes, we'll go ahead and fix that. Thank you, Steve.
Mm-hmm. And then on page, I'll just give you 80 of the agenda report. We have discussion of the, it's a mouthful, so I'm going to call it the triple CFA. Our bonds, we've got almost $2 billion worth of bonds out, I guess 1.9, something like that. Yep. And we're not showing those as a liability. So how do those get expressed, or is it simply expressed kind of in notational form like this footnote?
It is just included in the footnote. So we had to do an analysis, or I say we, I'm at management, did an analysis to determine one with any joint venture, how to do that recording. So it's either we have ultimate control over this joint venture, in which case sometimes it gets blended into your financial statements. That isn't the case with CCCFA, in which case it becomes a joint venture. And then you would only record that in your financial statements if you have a significant financial benefit burden relationship. And I believe the analysis concluded that since you can pretty much walk away if the transaction blows up, you don't owe that money. Therefore, it was not included in your actual financial statements as a separate line item. So we do just disclose all of that information in the footnote.
Okay, that's it for me.
Awesome, thank you. And if you ever have any additional questions or concerns, we're always happy to hear from you. So please don't hesitate to reach out.
All right, Madam Chair, I can bring the staff back.
Sounds good.
Thank you.
All right. Great. Again. So where are we now? So should we go into my presentation? Are we done with Beth? I think so. Okay, great.
Well, thank you, Beth. You're on mute, but thank you so much for all of your help and all of your hard work of you and your team. It's greatly appreciated.
Thank you. Thank you very much and have a great rest of your day.
Terrific.
Thank you.
All right. We will then go to the presentation of financial results. And I will try to, I'm going to be mindful of time and kind of roll through this expeditiously and then hopefully leave adequate time for everyone's questions. So with no further ado, we'll go to the next slide. Great. Yeah, as you know, we received a clean audit opinion. We increased our net position by 80 million and our liquidity to by 80 million and 162 million respectively, bringing our days liquidity on hand to 97 days and our reserve percentage to 20%. The financial results benefited from the rate increases that went into effect July 1st of 2022 and April 1st of 2023. Rising interest rates allowed us to earn a little more interest income than budgeted. We received 10.4 million from the the 2022 cap funds, which reduced our eligible past due accounts receivable. And we increased our line of credit with JP Morgan from 80 to 160 million, which helped our liquidity. Next slide, please. We experienced considerable adversity over the course of the last year. The September heat wave in 2022 knocked us back. We experienced gas and energy price shocks in December 2022 and January 2023. We had higher than budgeted renewable energy costs. And we had some costs incurred in prior years that were recorded in the past fiscal year. And then we had a cool spring, which reduced our expected revenue and margins in the spring of this year. We were within our budget limits for all expense line items, with the exception of SCE services, which I'll come to later in the presentation. Next slide, please. Steve, do you want to jump in?
Yeah, it's better because I'll forget. The adjustment from prior year, was that from our initial year? I'm trying to remember.
No, that was just the year prior, and that had primarily to do with renewable energy costs, which we sort of learned during the year were going to be higher than expected. And so we did not recognize that higher cost in the prior year, and so we had to recognize it in the past year.
Okay, thank you.
Great. So this is I'm going to just walk us through the balance sheet very quickly. A balance sheet consists of your assets, your liabilities, and your net position, which is the difference between assets and liabilities. Assets are all the stuff that we own or are owed to us. And then liabilities are all the stuff that we are obligated to pay to others. So as you can see in rows 2, 3, and 4, and then in column B, as of our fiscal year end, about 83%, 84% of our assets consisted of cash, accounts receivable, or accrued revenue. Accrued revenue is basically revenue it's electricity that's been delivered to customers and customers are consumed, but we just haven't invoiced them yet for it. So it's going to turn into an accounts receivable very quickly. So our assets continue to be very liquid. They're either cash or they're very near cash. And we don't have much in the way of long-term assets or non-current assets because we don't own any generating facilities. You'll notice on row 6, prepaid expenses went from 6 million to 46 million. That was primarily a result of contracts entered in with the investor-owned utilities to purchase resource adequacy. So the cost of resource adequacy has been going through the roof.
we've been trying to, purchase it from wherever we can. And we enter into the IOUs just to impose onerous payment terms on us. They just require us to prepay for a whole bunch of that resource adequacy. So we basically use about 40 million of cash of prepaying for resource adequacy, which is why you see that big jump on row 6. Next slide, please. Here's our liabilities. As you can see on row 18, it's primarily cost of electricity, accrued cost of electricity, which is basically invoices, unpaid invoices, and then energy delivered that we haven't received an invoice for. So these are all payments that are going to be made, shortly. The accrued cost of electricity increased because electricity costs overall have increased. And also because we purchased a lot of renewable energy from the IOUs again, and the IOUs can be just slow to invoice, somewhat ironically. Non-current liabilities, we've got some supplier deposits. We use these deposits to manage our credit risk, but it's basically cash that's owed to our suppliers. And I'll take questions just as soon as I finish the next slide. Here is that on the next slide, you'll see the fiscal stabilization fund balance continues to be 0. And you can see the net position increasing from 140 to 220 million. Essentially, that's the 80 million gain that we recorded in the year. Steve, and then Rita.
Do we expect further cap payments this year, or those have been exhausted?
There are no more cap payments expected.
Okay.
Rita?
My question was on slide 86. Line 3 and line 4, accounts receivable, and then the accrued revenue. Is there any possibility that there's any double counting happening?
No.
Okay, thank you.
Next slide, please. Okay, so here's some select financial indicators. I will just note, you'll see on the bottom line, the reserve percentage. We increased our reserves percentage from 18% to 20%. You'll recall that the target range is 30% to 50% pursuant to our reserve policy. A couple of lines up from there, you'll see days liquidity on hand. That also increased from 58 days to 97 days. Our target under the reserve policy is 120 to 150 days. So we made progress towards our reserve policy targets, but still have some distance to go. I'll just note parenthetically that the reserve percentage is basically the net position in the fiscal stabilization fund balance, so that sort of equity in the business divided by our costs. So we're targeting having equity equal to about 50% of our costs in simple terms. Our costs have been going up. So the denominator in that equation is working against us. So although we're adding to our reserves, the numerator, the denominator being our costs are also increasing. So it's making it a little bit more difficult to achieve, or a little slower progress for us to increase that reserve percentage. And that's kind of explaining why our reserves increased by 80 million, but that reserve percentage only increased by 2%, for what it's worth. Next slide, please. Here we come now to the budget to actual analysis. You'll see in column A, this is the budget line item. Column B is the amended budget. Column C is the amended budget year to date. Suddenly drawing a blank.
I think that's the.
Yeah. Sorry, go ahead, Steve.
Original budget, right? Pre-amendment?
Yes, thank you. That's the column C is the base budget. I beg your pardon. We're missing a word there. We'll get that added. Column D is the actual, and then column E and F are the variances in dollars and percent. So we are showing here column C, the base budget. to answer the question, okay, so how did you do relative to how you thought you were going to do when you started the year? And this is this was Chair Gold's suggestion when he was head of the Finance Committee. I think it's a useful exercise. So that's why you're seeing both the amended budget and then the base budget. And most of the commentary here will be with reference to the base budget. So you can see that we were considerably over about 5% over the base budget, and we were over the base budget as a result of the rate increase that went into effect in April, and that's offset by somewhat lower load overall, largely related to cooler weather conditions in the spring. I'll take the next slide.
But should there be a negative looking at that under line 3, column F? Total, revenues. Okay, we're just repeating.
Yeah,
okay.
we're just doing revenues. Yeah.
Okay.
Take the next slide. Energy costs considerably higher than the base budget. And this relates to all of the good stuff that I alluded to earlier, the heat wave, the gas price shocks, et cetera, et cetera. So 21% over the base budget, really quite significant. But you'll note that we remain below the amended budget for the year. Next slide, please. Here's our operating expenses. You'll note that we were a little over budget for rows 13 and 14, which is billing data manager and SCE fees relative to the base budget. We did in our budget amendment, we adjusted the billing data manager fees, but did not adjust the SCE service fees. That was we didn't adjust that. We exceeded the amended budget for the SCE services fees because after 3 years, SCE finally figured out how to bill us for some of the charges. And those charges went back several years. So I didn't include those prior year expenses in the current year budget. It looked as though we were going to land elsewhere with SCE. We had been in some discussions and they were like, look, here, we'll do it this way. And then finally, kind of this spring, they kind of showed up with an invoice and a eureka, we figured out how to bill you. And as a result, we went a little over budget for the year. I'll take the next slide. And here we have the bottom of the income statement. You can see on row 23 the change in net position. We were certainly below expectation for the whole year, but the 80 million contribution you see in row D was a terrific outcome. We recorded a $34 million loss, you may recall, through the first 9 months of the last fiscal year. So we were down 34 million as of March the 31st, and we turned that around in the fourth quarter of our fiscal year and recorded an $80 million gain. And so that was just a really terrific outcome and a terrific turnaround from our perspective. And I'll just note again, our interest costs, income being, you'll note, 1.2 million higher than originally budgeted. Interest rates went up and our cash balances were a little higher than expected. Next slide. Okay, I'll take questions on that presentation. If there are any.
No questions.
Sorry, I ruined it. It's this, just clarification. Our line of credit, the rate is variable?
We pay a fixed non-utilization fee equal to 0.45% of the unused portion of our line of credit. When we borrow money, which we have no borrowings at present, we pay a variable rate plus a spread.
Okay, thank you.
I'm gonna just stick in, it's interesting that because of the rise in interest rates and the rise in our interest income seemed to almost cover rent and one of the other expense categories other than normal operations. It was quite a bit.
Yeah, and it should continue to increase. We're going to we are currently looking into investing in CDs now that we've come out of the summer and our liquidity position is kind of stabilized. And that should allow us to earn still more interest income.
And I noticed, David, kind of along those lines, and I think kudos to you, that our collateral requirement is about half of what it used to be for that outstanding line of credit. Is that a correct reading?
Well, no, we have no, well,
well, I saw the collateral requirement come down almost half. And I assumed it had to do with that, maybe not.
no, not so much that. That would have been more on the energy.
Oh, I see.
On the collateral requirements under energy contracts.
I see.
And really, when you're looking at the balance sheet, you look at there's not a big difference between a collateral posting requirement and a prepay. So I usually look at they are technically different, and that's why they're separated on the balance sheet. But I look at them kind of together because you can do it either way, and it amounts to the same thing. You're paying the vendor before they deliver the product. And if you sum those two things together, our posting obligations went up.
Okay.
But thanks anyway.
Yeah. Now I have a clearer picture.
Great. I think that's it.
That it? No more questions? I think that brings us to the end of the agenda, unless there are any comments from committee members.
I would just like to thank staff and our auditor for presenting a very readable audit report.
Agree. Thank you.
Perfect.
All right. Well, with that, looks like we'll adjourn exactly at 12 p.m.
Terrific. Everyone.
All right.
Just a
Have a
reminder
great day, everybody.
members that our next meeting is on the 29th of November.
Oh.
Move it, yeah, to accommodate for the Thanksgiving holiday.
All right.
Oh,
Thank you for that.
Perfect. Thank you, everyone.
Thank you. Time is 12:01. We're now adjourned.